Good afternoon and welcome to the Sound Energy PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions can be submitted anytime via the Q&A tab situated in the right-hand corner of your screen. To click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, review all questions submitted today and we'll publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Graham Lyon, Executive Chairman. Good afternoon, sir.
Thank you very much. Hello, everybody. You've got me, Graham Lyon, the Executive Chair of Sound Energy, and also Gary Dempster, our Chief Financial Officer. We're going to give you a bit of a background about the company. Some of you may be new to Sound Energy, not understand the whole story. And then we're going to focus very much on some of the exciting news that we've been able to release to the market over the last couple of weeks. So, of course, we've got a couple of slides where we disclaim everything. And what we're going to do now is we're going to give you an overview of where we are as a company, what we've been planning to do, how we're trying to deliver on that. We're also going to talk to you about the people we work with. Gary is going to go into a lot more detail about the exciting news that we've had with our financing, and the major part of our portfolio is looking like we can deliver that. We'll introduce ourselves and go through the questions that you've submitted, and there's been quite a lot. We're lucky enough with our shareholders and stakeholders to get some very interesting and quite detailed questions. So we've got quite a lot of those to cover tonight, and then we'll finalise and wrap up. So hopefully about an hour. So what am I going to do? Talk to you about the strategy and where are we as a company? Well, we are in Morocco. Morocco, as you probably know, is energy deficient in its gas and moving in a transition energy way through to solar and wind and renewables. But energy in the form of gas is its core transition energy. We have got large acreage positions onshore in Morocco, and that gives us the ability to develop it on a phased basis. The company in the past was very exploration driven. So from very good successes, some good exploration wells, tested well, flowed well. And the company now has changed its strategy from being purely exploration into development and bringing it through to production. We've done that by breaking the projects down in the east of Morocco. Our large acreage position is on the Algerian border inland. It's quite large, 14,000 odd square kilometers. And we have a concession there, which we have got a discovery on and which we will be developing. We've broken that down into two stages. One stage is to supply the industrial market with transportable LNG, and that replaces the imported LPG that currently the end users are buying. The second phase is a pipeline project. That's the more material, the meatier project. We are 120 kilometers south of the main GME pipeline that used to bring gas from Algeria across Morocco into Spain. That gas was turned off at the end of 2021. And so Morocco's two power stations are short of gas. They're currently partly importing some gas from Spain, reverse flowing along the GME. But we intend to be producing gas from Tendrara, Moroccan gas for Moroccan power stations. Part of that process has been accelerated by a resolution of a tax claim that was against the company a while ago. We still have a big exploration portfolio, and once we've put this core infrastructure in place in the east, it will allow us to quickly monetize any discoveries and any developments. We'll talk a little bit about the corporate side of the company in a minute. But the micro LNG project is the very first project that we've kicked off. It started last year, and we are responsible for the wells. We have two wells on the site at the moment. We will be producing gas from those wells, tying it into an LNG plant, small-scale LNG plant being manufactured through a vendor financing contract with Ital Fluids. And at the site, we will have our partner Africa Gas transporting the LNG away, regasifying it and giving it to the industrial market. So we're moving along on that development. And where we are with the first phase has three segments. One segment that we're responsible for which is the wells and the flow lines. Second segment, which is Ital Fluids' responsibility, is to provide a skid-mounted processing facilities and LNG liquefaction facilities and storage. And for that, we're going to rent that equipment. Third segment is Africa Gas with the transportation. Now, work has commenced last year. We've done a lot of work and we've built quite a bit of infrastructure bases, and particularly the LNG tank base. That's all done. We're now waiting to reactivate the site, and that should start very shortly. And that will be mostly to do with the LNG tank erection. And that's tank is being acquired through Cryo Spain from Spain. This will provide us about 10 million cubic feet a day of sales gas in the form of LNG. But a much bigger project is the pipeline project. That's not as advanced on the engineering front. We do need to move that one a little bit further along. FEED study was done in the past. We have got all the approvals in place. We own the land, we have the concession, we have the environmental impact assessment done. So what we need to do to get this project moving is financing, and Gary will go into a lot more detail about how we've been able to put all the financing together to get that project at the final investment stage, hopefully towards the end of this year, early next year. The gas sales agreement is 300 million cubic meters a year, which is around about 30 million cubic foot a day. So 3 times the size of the micro LNG. And that gas is sold to our state partner, ONEE. The key elements I've said that we've just announced are debt financing with Atijuafa Bank, a substantial project debt financing. Several CPs involved in that, and they're quite traditional, normal CPs, regulatory approvals, gas sales agreements, and engineering. And Gary will go into the detail. We've had a lot of detailed questions, and the presentation will cover some of those off. How do we bring the rest of the money? We're a relatively modest and we think quite significantly undervalued company. Our net asset value is significantly below our enterprise value or our share price, our market capitalization. So we've looked at different ways of bringing financing into the company, and we have selected Cal Valley as a partner in this project. But there are other sources of funding. Mezzanine debt can come along, subordinated loans. There could also be some vendor financing in the package in the long term if we so desire. But at the moment, the project has all the elements of putting everything in place. We're not going to be out there knocking on shareholders' door for an equity placing to finance this project. We think we've got that all in place. And now it's ticking off those CPs and getting us to the stage where we're ready to take the investment decision. We still have a lot of potential. If you look on this map here, the Anawal and Greater Tendrara exploration acreage is massive compared to the concession, or what's called the TE5 Horst, in the center of the red blob in the center there. So we're the largest permit holder onshore Morocco, and because it's onshore, we're able to phase the development of this. We can do it every time we make a discovery, every time we have sufficient resource identified, we can tie it into the infrastructure. We can either tie it into the pipeline once it's been built, or we can do another LNG project, or we could even do something else if necessary. We do have some near-term drilling opportunities on the exploration, and part of the deal with Cal Valley, Gary will go into, includes us taking an exploration well at the TE4 Horst, where a gas discovery has already been made, and it's very close to the planned infrastructure for the pipeline. So quick development once that well's successful. We do have other wells to drill in Anawal. There's a large prospect called M5, which we would like to drill. And then in the south and the west of the country, completely different geographical location, but the same Taggy reservoir. That's a tight gas sandstone at Sidi Mokhtar. And there's been some questions about Sidi. How have we been doing this over the last 3 years? Well, we've been doing this by partnering up. We've been partnering in phase 1 with Ital Fluids, the Italian contractor who's providing vendor financing and will provide us equipment, and we will lease that from them with an opportunity to buy it back over a period of time. Africa Gas, who is not only a shareholder in our company now, but is also the off-taker of our gas and has provided us some soft loans. We have Attijawaffa Bank, one of the largest banks in Morocco, who we've announced has provided us a term sheet for debt financing for our phase 2, our pipeline project. We have Calvalia and Octavia, its parents, as our technical partner, as our joint venture partner going into this development, provided we close the deal, and we're working hard on that. And then finally, we obviously work closely with our government partner, ONIM, who have a 25% share of the project. For those that are not aware, ONIM as a state participant is carried through the exploration phase of the project, but pays its share of 25% of every development. So they're a fully paying member of the consortia as we go forward. ESG is core to our business, and that's corporately, environment, social and governance. We have a sustainability plan. We are following some of the 6 of the main United Nations Sustainable Development Goals, which we think are appropriate. We're measuring our CO2 emissions, and we're doing things in a fair way, being a listed company. So all of those things come together, and that helps us get to a sensible way of developing our business projects. We've moved the company from exploration through to development and production. But I've talked quite a bit already. Let's pass over to Gary and go through the meat of the presentation.
Okay, thank you, Graham, and good evening. Nice to present in this forum. My name's Gary Dempster. I'm the CFO of Sound Energy. So I just wanted to talk through some of the financial aspects of the business and the journey we've been on over the last few years. As Graham mentioned earlier, we've shifted the strategy of the company since we came on board as a leadership team in early 2020, very much away from exploration being at the front end of the value proposition of the company, and ultimately looking towards an exit, as it was back then, to becoming a revenue generating company and monetizing the intrinsic value that we have within the business through the development of the discovered molecules that we have. So we've been making good progress in that regard. As Graham's indicated, phase 1 obviously is underway. Phase 2, the gas pipeline development, we hope to get underway very, very soon. So things are moving ahead nicely. We've got first gas scheduled for 2024, so we'll be revenue generating from then. And then the intention obviously is to bring phase 2 on stream thereafter, and for the business to become self-funding thereafter, and to have excess capital available for deployment into other investments or other distributions. That's the intention of the strategic shift we've had since early 2020. And that's firmly based around the organic side of development of the existing portfolio. But we are keen to grow, but we have to obviously grow within our financial envelope. So we do so by evaluating a basket of opportunities, both organic opportunities, but also inorganic opportunities as well, within the traditional upstream transition energy space, but also looking at some other opportunities to add some other elements to the portfolio in the renewable space as well, where we have strategic advantages through our position in country in Morocco. So we've been evaluating a number of opportunities over the last couple of years in that regard. We haven't moved forward with anything yet because we haven't identified the right opportunity to move forward and develop and grow the business, but we are actively looking at that on a continual basis. And then in terms of capital access, obviously for a small AIM-listed company, that's one of our key challenges in the business. And we've restructured the capital base of the company over the last 3 years as well, so that we can operate within the financial envelope that's available to us. Principal among that was restructuring a corporate bond that we undertook in 2021. That was due for maturity midway through 2021. At the time, we didn't have the financial capacity available to redeem the bond, so we went into a restructuring exercise with the bondholders and successfully renegotiated the terms of that bond and pushed maturity out to 2027, which is within a time frame that we have the financial capacity to meet the principal repayment obligations associated with that bond. So that gives us the financial breathing space to move forward with some of the more exciting elements of the investment phase within the business. And as part of the access to capital, we also entered into a debt arrangement with Africa. So Africa are the buyer of the gas from the phase 1 micro LNG development. And what we did was we entered into an $18 million loan note agreement with them on very favourable financial terms, a 6%.
Just seem to have lost you there, Gary, momentarily. Bear with me one second.
I think it seems like Gary's frozen a bit.
Yeah, I think Gary's just, let's just refresh. Let me just refresh you and bear with me one sec. Just see if we can bring you back in. Just do bear with me, ladies and gentlemen, just while we get Gary back in the room. Graham, just like Gary,
well, I can carry on. Why don't I carry on? Yeah, let me just carry on, and when Gary can join us, he
Perfect.
can pick it up.
I'll confirm when he's back in the room. Thank you.
Okay, so people can hear me now, can they, Mark?
Yes, they can.
Okay, fine. So as Gary was saying, getting access to capital for a small market cap company has always been our biggest challenge. Technically, we all know how to run a business. We all know how to do our oil and gas. But finding the funding for when you're a small market cap company is difficult. So as Gary mentioned, we have taken on some debt with Africa Gas. They're our off-taker. So essentially, it's a little bit like offtake financing. So we have that with Africa Gas now. And we had, and one of the questions brings this up, we had quite a lot of thought about how the best way to raise the required capital for the equity portion, the non-debt portion. There's different ways of doing that. As you can see in our phase 1 development, we chose not to go to the market and raise equity. We chose to take a leased option. So we got the vendor to do some financing. Another way, of course, is to tap the market and go and ask shareholders to provide funding. But the third way is to reduce your equity position at the asset level. And that's what we've done with the partnering up with Cal Valley to bring a partner in who's actually got access to deep pockets and can help us a lot. We'll talk about that. Gary is a good Scotsman, has been very good at controlling our G&A, keeping our costs as low as possible. And we've done that through not having very many staff and partnering with key providers, not just the strategic technical providers and technical partners and financial and government partners, but actually consultants and contractors, medium-sized, small-size specialist engineering firms and advisory boutiques. So we think we can grow some value for the shareholders. We certainly believe our share price doesn't recognize the value in the company and the net asset value of the company. Our shareholder composition has a large portion of retail shareholders. Our two top shareholders, the Oil and Gas Investment Fund of Morocco and Africa Gas themselves. So we have a strong Moroccan flavour in our shareholder base of about 15%. About 10% is small institutions, and the rest are retail and directors and officers of the company. So let's go through the deal, what we've done with the transaction recently. And we've announced this. We had a process kicked off last year, and it was quite a well-run process by Nice Energy on our behalf. And we were a 75% position in the company, in the asset, which is quite a large position for us as a small market cap company. So bringing in a partner to share that was considered a good opportunity. With Cal Valley, what we're prepared to do is we'll divest 40% of the working interest across the two licenses. and we'll give that in exchange for certain financial package. And it's not just one thing. So they're joining the projects as though they've come in from day one. So they pay us back all the costs that we've put in so far. They contribute further ongoing phase one costs. They also contribute to their share and our share up to a cap of 48 million of the funding, the equity phased funding of phase two. And they're also providing us a carry on the T4 Horst exploration well. So it's a package, and they're coming in. They are also in a position, because Calvally is linked in with the Octavia Group, who have similar shareholders of a very large Middle Eastern conglomerate, which has access to a lot of money. And so there's an opportunity, should we so wish, to draw down a larger financing. So we think that's a good opportunity and financing, and that coupled with Ati-Jawafa Bank is pretty good. There's an exclusivity period. Clearly, Calvally has done a lot of due diligence on the company. So now this is what is traditional DD, lawyers poring over agreements that are in French and having them translated into English and making sure that all the bells and whistles are correctly in place. So that's all going on at the moment. The next part of the package is really to just bring to light to shareholders what the T4 Horst opportunity, with Calvally coming in and carrying this exploration well for us. A significant volume is available. And if you look at the chart there, we've got over 250 BCF of gas as a best estimate gas in place. The well T4 was drilled in the past, and our geologists will tell you, and not by sound, by the way, in not the most correct location. The mapping has shown, this is the dark red, that the higher up you come, the closer you are, and the gas is more likely to be there. This has a chance of success of about 36%. And if it comes in, it's right on top of the discoveries and the TE5 Horst development, and therefore very close to infrastructure. So it could be brought on production quite quickly. So this would be considered a relatively low risk prospect, but of course it's not a guarantee certainty. But yeah, the idea that Calvally come in and fully carry us on this well, I think is very attractive to us as a company. The other part of this structure is the senior debt, and we've been working on this with Ati-Jawafa Bank for quite some time now. And I apologize to shareholders who got a little bit frustrated, but this is the first time a project debt financing like this will have been done in Morocco, and therefore they are doing it correctly. They brought good advisors in to help them. And welcome back, Gary. I can pass over to you if it's convenient. I've only just entered into the Ati-Jawafa Bank slide, so if you want to take over from now, Gary, that's fine.
Yeah. Okay. Thank you, Graham. And apologies. I'm not sure what happened there. There was a connectivity issue, so hopefully you can hear me okay now. So yeah, just picking up on the senior debt component of the phase 2 development. So the intention is to fund the development through a blend of debt and equity. Graham's mentioned the equity component that we're in the process of trying to finalise by way of the proposed farm-in of Calvally, but the debt component is the principal element of the overall fund.
So it looks like we've lost Gary again. I do apologise.
Looks like it's happened again. So okay. So as Gary said, it's the debt funding is the main part of this, and what we are doing with Ati-Jawafa Bank, where they have worked very hard on structuring this in a way that works for everybody. So we will have this will be in a dirham facility. So we will require a newly incorporated SPV, which is typically standard. All the consortium come together in the SPV, and don't forget this will include ONHYM as a 25% shareholder, funding their share of the 25%. So the borrower will be an SPV. We fully expect ONHYM to be in it. So all of the shareholders in the consortium, in the concession, will be the borrower in a Moroccan SPV. 2.365 billion dirhams. That's round about 237 million dirhams in today's money. A rough gearing of 65%. Working with the Moroccan banks, we have found them to be very flexible, and therefore these numbers are in the term sheet, but in the end they may change a little bit one way or the other. A 12-year period is very attractive with a 2-year grace period. So 2 years to develop this project from FID, and therefore we will have revenue to start paying this debt down, and that debt will come as the primary recovery from the revenue stream in the project team. Gary, I'll carry through on the left-hand slide, and you can come in with the conditions precedent. One of the issues of any debt financing is security, and this will be typical project-related security and why the SPV is put in place. The interest rate is commercially sensitive at the moment, and in fact, it's not. They've given us several options. It's a little bit like the variety of buy-to-let mortgages that used to be out there, maybe not so many today. But they've given us an option of fixed and variable, or slightly variable, fully floating, not floating, and we're working that up. But the interest rate is very comparable to the current sort of level of interest that we have with our project ongoing in phase 1. And of course, the proceeds go into the whole project. That means the drilling of wells, that means the processing, that means the flow lines, that means the pipeline, the tie-ins, and everything, and the project management. So the good thing about this is it's a true project financing. The whole thing's encompassed, and then by bringing a partner in like Cal Valley, the whole package can be put together. And I think what we've announced over the last couple of weeks has really moved the doability of this project from a pretty high level, because the Moroccans want it to happen, to a very high level. Of course, there's bells and whistles that we have to go through, hoops that we have to jump. And Gary, why don't I pass to you to do the CPs that are requested of us?
Sure. Thanks, Graham. And hopefully third time lucky on the connectivity. I'm not sure what's been happening there, but the conditions to the offer are standard in terms of project financing. So you'd anticipate that the types of conditions that are associated with the offer that we've received from the bank would apply to this level and this complexity of project financing. Typically what those are governmental ministerial approvals of the structure of the SPV, not the actual development itself, because we've actually received development consent already, but we need to go through the governmental approval process for the structure that we're proposing to put in place. We obviously need to go through the appropriate clearance with the tax authority to ensure that the taxable treatment of the development is in the manner that we plan for. So again, that's fairly standard for this type of arrangement. Then there are some other elements that we want to work on as well, certain amendments to the gas sales agreements, or the sales agreement with ONE, to ensure that that's satisfactory to the lender. We need to conduct more engineering. We've done engineering previously on the pipeline development, but we need to refresh that and update that, and then go back out to the market to secure more definitive pricing for the EPC development. So these are all what we call pre-FID activities that are customary, and we'll conduct those over the course of the next period, and hopefully we'll close those out over the course of the next period of time to enable us to move forward towards an FID decision in as timely a fashion as possible. Naturally, there'll be a question of, well, when will that be? It will be when we're in the right position to have adequately addressed this suite of arrangements that's required before we finalise and close the financing. So we're not going to be time-bound driven. Obviously, we want to close the financing out as quickly as possible and move towards FID as quickly as possible. But what we do want to ensure is that we make the right decision for the company, for shareholders, and for all the stakeholders that are involved in development. So that's the course of action and the journey that we're on at the current moment in time. But I think what I would say is we're actually delighted to have achieved the milestone that we announced a week and a half or so ago, because this is a significant milestone for the company. It's tremendously difficult to access bank finance for upstream players in the current environment. The majority of US, European banks that traditionally operated in this arena have pulled out of upstream investments. So for us to have closed this out for such a significant sum of money is a big achievement by the team that's been operating and developing the senior debt.
Thanks, Gary. Yeah, and I would also add to that in this difficult time in the upstream energy business, to do a farm out type deal, partnering type deal that we've done with Cal Valley, where you have an exploration well fully carried, and also you have a fully carried, well, up to a cap, but pretty much fully carried phase 2 development from the equity side, I think is quite an achievement. And I would like to thank the team for doing that. So yeah, we've got an exciting time ahead. This is a couple of slides, a couple of pictures here. That's the micro LNG plant on the left in the 3D model that we're developing. So this is real, this is happening. This is on the ground now, and these things are going to be built and landed and up and running next year. On the right, we've got a whole load of copper cable ready to be wiring things in. So life's moving on fast. We also are being able to reactivate our exploration. We obviously had some problems during the COVID period, so that's going to be reactivated. And as we develop our portfolio, I think shareholders will see the value in that in our share price. We're now at the questions side, and so I think we can probably close down the slides. And we've had quite a lot given to us earlier on. So Mark, if that's okay, shall I go straight to them, because we'll catch up a bit of time that way?
Absolutely, that'd be great. Thank you very much indeed, Graham. Just read them out and where appropriate to do so, and give your response, and I'll pick up from you at the end.
Thank you. Right. So we had I think it's quite a few questions in advance. What's happened with Citi? Shareholders got diluted massively for what? Please advise what is intended for Citi. Well, I think we've shown you that we've actually got 75% of Citi Mokhtar. ONHYM have 25%. So we are at the maximum equity position we can be in Citi. And yeah, we need to drill. So we need to get some seismic shot before we drill a well. So we have a work commitment to do that seismic, and then the well will come subsequent to that. I think if anybody's referring to a deal that was done way before my time and Gary's time, there was the entry into Citi was in exchange for some shares. So I think if you look at where we are at Citi now, we're at the maximum equity position we can be at 75%. The next question I'm going to hand over to Gary, but I'll read it out. When will we be given the financial metrics of the bank deal just confirmed? We know the list of issues to be agreed. However, the crucial details like the interest rates haven't been told.
Okay, thanks, Graham. So I think as Graham kind of outlined, the conditions precedent are there at the moment. We've announced what those are, and it's necessary to act upon those and complete those before we reach financial closure on the transaction. The bank are very sensitive to the commercial terms going into the public domain before we satisfy those CPs. So it's a case of bear with us. We will get to that stage, obviously, once we've conducted the next steps in the process and closed out those CPs. We'll announce the terms to the market. What I can say is that the terms that we have received in terms of, I guess, the key element is that the coupon offerings that we have been offered by the bank are very, very attractive, and certainly more attractive than a company of Sound Energy scale would reasonably expect. There's a lot of governmental support in country for this development, so that has helped us because the bank have been
very favourable to us in our discussions. We've negotiated a good deal with them. So I think once we get to the stage of announcing the coupon and the other commercial terms, shareholders will be very pleased with the outcome that we've achieved. So look forward to updating the market and shareholders in due course.
Okay, thank you, Gary. I heard you, but I think you've frozen again.
Gary, I'm just going to take your camera down just so we can hear your audio and keep that integrity.
The next question is, when will TE4 be drilled? When are Sound and Cal Valley Petroleum planning to drill the TE4 prospect? Well, the first thing is just to get the nomenclature right. The TE4 prospect is a horst, and the new well will be called something else, right? It won't be called TE4. It will be called whatever the ONHYM government assigned to it. ONHYM will be carried throughout that, but of course we can't drill it until we've closed the deal with Cal Valley. However, we are doing as much planning and preparation as possible to move forward with that as quickly as possible, because clearly we want to make the most of that. And so yeah, bear with us. We want to close Cal Valley first before we can confirm when TE4 our well will be drilled. Next question is also for me. It's a long question, so bear with me, but there's a little bit of a compliment before a slap round the face. It is brilliant that the Sound team have established possible funding to cover much of the enormous capital expenditure to get phase 2 up and running. The share price, however, has dropped substantially since the announcement of the Cal Valley agreement. The market seems to interpret it not so much as a farm out, but more as a handout. Well, I think I've explained some of that already. SP Angel has almost halved their predicted share price for Sound. Well, when you dilute at the asset level, that's what you get. Sound is transferring to Cal Valley 53% of its 75% holding. Anyway, we'll get down to the question, which is, can you explain how Sound will be able to maintain control of the company? And secondly, should we be changing the company name from Sound to Cal Valley? Well, the answer to that question is the development is going to go ahead with Sound Energy Morocco East as the operator. It will have Cal Valley in it, and it will have ONHYM in it. All three companies will form the consortium. And Sound Energy Morocco East will remain the operator. Cal Valley will be a partner in that project and will be fully informed and fully working as a joint venture partner, as will ONHYM. Each will be a funding partner. So there's no plan to change our name to Cal Valley. Cal Valley is a private company and Sound Energy is a public listed company. So the next question I think I've got as well, it's brilliant that we've been funded by the Africa loan, and that Sound was looking forward to 75% of the LNG revenues for the next 10 years or more. If the agreement with Cal Valley proceeds, their contribution is just 8 million into phase 1 as the share of 40% of the plant costs. That will entitle them to 40% of the revenues, which is far in excess of the 14 million of the greater than the 10-year life expectancy of the project. Well, we can get that. Question, does Sound really need to give so much away? And secondly, as it's already funded by Africa, could Cal Valley not make a smaller contribution and just go into phase 2 of the project? Well, as I mentioned before, we're a consortium, and the project is going forward in a way that the equity needs to be put together. And I mentioned earlier on 3 ways to get the equity. One is you could do some vendor financing. That means you lease everything, and that becomes very expensive. And on a project this size, it's difficult to do that. Second one is you can do an equity dilution at the PLC level. We clearly didn't want to do that. With a market cap the size we are, trying to raise this sort of level of money is almost impossible. So, and shareholders wouldn't like that. So bringing in a farm-in partner, a partner into this project is considered the right way of doing it. So we believe that having Cal Valley and their wider network and their similar shareholders involved in this project will allow us to take this project from something that would have been very, very difficult to finance to now something that's achievable. And that, coupled with Atijo Bank and the ministry's support, etc., then I think we're in a much better position. The Cal Valley deal brings us different elements. It brings us the back costs. So they're in this project as of they're in from day one. They onward finance for phase 1. They drill an exploration well for us. They carry us in phase 2, and then we've got access to further group funding. So, I think we're bringing in a very good partner, and I think also a partner that's not going to swamp Sound. And so together we can be a very good way of developing this. And with Attitude Alpha Bank on top of that, I think that's very good. So the next question is for Gary. Gary, can you hear me okay?
I can, yes.
Okay, great, thanks. In relation to the deal with Cow Valley, what's going to happen regarding to the payment of the 25 million euro bond that we've out there, which is due to be amortized from this December? Do we have sufficient funds to satisfy this agreement before phase 1 revenues begin, and we will be able to repay the bond with the greatly reduced phase 1 revenue?
Yeah, thank you, Graham. So yes, we're obviously fully aware of our bond commitments and the requirement to start amortizing the bond from December. We regularly pay our quarterly coupon payments. We've never defaulted on that. There's no intention of defaulting in any of our subsequent repayment obligations. So we have presently sufficient funds within the business to be able to meet the December amortization payment, and then once we actually start producing, the revenues are sufficient to enable us to comply with our financial obligations for the bond. So we're in good shape as things stand at the moment.
Excellent. Another one for you, Gary. Can you give some indications as to the potential revenues for Sound for both phase 1 and phase 2, and how can we improve this if the T4 exploration well is a success?
Yeah, okay, thank you. So as you pointed out, the transaction with Cow Valley is yet to close. So everything's dependent upon successful conclusion of the phase that we're in with Cow Valley at the present time. Also, what I would say is currently we don't actually issue revenue projections to the market. It's too early in our life cycle to do that. What I would suggest is that there's good research in the market from our broker SP Angel that can be referred to, and that gives a good illustration as to the revenue generation potential of both phase 1 and phase 2. And if you look at that research, you'll see that once we're through the investment cycle on both phase 1 and phase 2, we're generating revenues net to Sound at the projected 35% equity level of around $65 million per annum on an annualized basis. So that's the kind of revenue generation potential post the farm out once we've got phase 1 and phase 2 on stream and we're fully through the investment cycle. And then in terms of TE4, obviously that's an exploration prospect. So there's exploration activities yet to be undertaken on that. The P50 estimate for that, you'll have seen that from the slide earlier, it's around 260 BCF in place gas resources associated with that. So if we assume a 50% recovery factor on that for the sake of argument at the moment, that gives you about 130 BCF of recoverable 2C gas potential, which is roughly in line with the sales gas commitments that we have for the phase 1 project with Africa and the phase 2 project that we intend to put in place, or the GSA we intend to complete and put in place with ONE. So it gives you a sense as to the scale of the potential of that TE4 opportunity. And obviously, once we've gone through the phase 2 development process, we'll have a pipeline in place. So that lowers the bar of commerciality for any future discoveries, including TE4, if that's successful upon the exploration well that we're planning.
Oh, thanks, Gary. Thanks, Gary. There's more questions on TE4. The success or failure of the proposed T4 drill will have a significant effect on sourcing and securing the total funding for phase 2. I understand the drill rig is on standby nearby, and can we be assured that this drill has a high priority and will be put into action as soon as possible and not put on hold until everything is agreed regarding the phase 2 funding? Well, actually, the T4 is completely independent. It's an exploration well. It's not sitting within the development concession, so it's got nothing to do with the timing and the development of the phase 2. So it's no bearing at all on that front. The local rig that's there is currently owned by KCA Deutag. It does need reinstating and recertifying. It's not been used for a while. And we've been looking at other rigs in the area, and we've been looking at other rigs to be brought into the area. So I think I said earlier on, we're doing as much pre-planning as we can to get this work done. And we clearly would want to optimize it with any further drilling work we're going to be doing on the phase 1 development or coming into phase 2. But as soon as we've closed the Cal Valley deal, we're up for getting this well drilled. The next question again on T4, and I think I'm going to have to take that one again. Will T4 drill be exploratory, or is it going to have a significant horizontal component like T7, aiming to maximize flow rates? And does the 7 million that Cal Valley offer cover the full cost of drilling it and horizontal drilling and fracking? Well, I think the answer to that is it's planned to drill this well as a vertical well to keep the cost low. We'll log it, we'll core it, and if successful, in other words, we believe it's worth testing, we'll test the well. We know the Taggy produces when it's best and mechanically stimulated. So, but mobilizing the frac units is quite expensive. So what we would do would have that well ready, would have it tested, we'll have an open hole test perhaps, flow it, and then we will look at optimizing it in with other wells that we'll be drilling in the concession development, so that we can bring the frac units all to site at the same time and frac several wells in one go. Of course, this is ongoing work and optimization, but the 7 million should more than cover the drilling and coring, logging, and vertical testing of the first well. The next question, I think, is coming to you, Gary. The contribution of both Cal Valley and Ati-Jawafa Bank is really substantial, but still falls short of millions of covering the total cost of phase 2. Can we be given indication as to how this shortfall can be made up and how long it will take?
Okay, thank you. So the structure of the funding for phase 1 and phase 2 obviously is a blend of debt, senior debt from Ati-Jawafa Bank, and equity funding. The deal that we are in the process of trying to conclude with Cal Valley is for the full equity component of the anticipated capex to get us through the development phase on the phase 2 development. So there is no gap as things currently stand at the moment. We've also agreed with them in the term sheet, and we'll put this in place in the binding documentation, that there is also another element there whereby if there were to be any additional equity investment requirements for that phase 2 development, then we will access further monies from Cal Valley to plug any gaps in return for sharing a small element of the revenue through the revenue generation cycle of phase 2. So in summary, there is no gap as things stand at the moment, and if there were to be an equity gap at some point in the future, then we've got a mechanism in place or a mechanism agreed, I should say, with Cal Valley to address that.
Thanks, Gary. Moving on for the other exploration that we have in our portfolio at Sidi and Anawal, is Sound going to have to wait to phase 2 revenues now that phase 1 revenue is reduced before it can take action on these exploration permits? Has Cal Valley or any other party shown interest in participating in these exploration wells? With phase 2 going, Sound should be in a much more robust financial position, and can we get a better farm out partner should one be necessary, or are we tied to Cal Valley for future exploration? Has the future of SPK1 been discussed with Cal Valley? How is Sound going to fund this, etc., etc.? So, I mean, the answer to that is they're all good points. As I said right up front at the beginning of this, we've got very astute stakeholders and shareholders who know this detail inside out. We do have commitments on Anawal and Sidi, and currently we're discussing those with ONIM. And as we announced back in December last year, we have an extension on our exploration permits, but those have yet to be formally ratified by the ministry. And so here we are in mid-June without that being formally ratified. We have discussed those with Cal Valley. I think their entry into Morocco is quite a large one as their first step. Those opportunities, of course, will be available to them should they want to. And are we talking to other people about Sidi and Anawal? Well, we're not in exclusivity on Sidi and Anawal with Cal Valley, where we are for Grand Tendrara and the concession. So all things are open for us, and we're working hard on that. We've got this question now. Can you list the hurdles that Sounds are still to cross before phase 2 FID is achieved, and what can be done to solve these issues? Well, actually, I think Gary's either discussed it in one of his answers or certainly on his slides, that there's routine CPs. I mean, they are routine CPs. They do need a bit of work, and we have been working on them for some time. So it's not like we waited for the term sheet before we knew these CPs were coming ahead. These are all standard things that anybody and any bank would be expected. So we're working everything in parallel, and rest assured that getting phase 2 to FID is very core for this company. So it's our main focus. Right, what alternatives are there to being analysed regarding the commercialisation of 195 BCF of uncontracted gas? I think, Gary, this is referring to the difference between our 2C resource and our 1C resource.
Okay, thanks, Graham. So the good thing about the position we've got in Morocco is that there's no shortage of gas market. It's one of the key attractive features of being present in the country. We've got additional potential to sell gas to ONE. They would clearly like to take more gas than they're currently contracted to take under the existing GSA. So that's one viable option for us, and of course at attractive pricing. The second element is into the industrial market. So that's the market that we're accessing through the phase 1 development. So we can either sell more molecules to Africa or to an industrial buyer of another description as well. So there's another opportunity there. And again, the pricing fundamentals are strong. And then the third element of the market that's available to us is selling into the European market, either to a trader, a gas buyer, at the GME pipeline system as well. We've had a number of concrete discussions at various points in the past from European buyers as well. So that's another element that's open to us. So there's no shortage of market available to us for additional molecules that we have already discovered or we may discover in the future. And the positive thing is that the pricing fundamentals are strong, particularly more recently as well on the back of the shift in the European gas market dynamics. So we're confident that there's a good outlet and attractive pricing available to us for future molecules that are developed.
Well, here's one for you, Gary, that I think it's a nice position to have. How are you going to spend the 8 million that Cal Valley is going to reimburse you for the past costs?
Yeah, good question. And obviously, as we've indicated, we need to close the transaction with Cal Valley, but we're confident that will be achieved over the course of the coming months. And how we use that 8 million? Well, we'll use it very efficiently, as we've done with all of the monies we've had available to us over the last few years. We've been very efficient in our allocation and use of capital, so we'll continue to do that. In terms of concrete investments, clearly there's a number of activities that require to be undertaken to enable us to reach FID on the phase 2 development, whether that's the FEED, whether that's further elements of DD in terms of closing out the project financing. So there's a series of investments that are required to take us to FID on the phase 2 development, which will account for a significant investment, and the funds obviously will be available to us to deploy from the back cost from Cal Valley. So there's a number of different opportunities that we have available to us to allocate the finance, but the majority of it's likely to be allocated to the pre-FID activities on phase 2.
Thanks, Gary. So the last question that was pre-submitted is a repeat of the same one about the project company that we need to set up, the SPV that we need to set up for the dirham-based loan. So Gary's already answered that one. There's some live questions that have come in, and I think I'll take those so that we don't eat into too many people's dinner this evening. What amount did Sound agree to pay the Moroccan tax authorities in the recent settlement? Well, that was reported in our year-end statement, in the annual report, etc. And it's framed over 6 years, and it's a staged payment over 6 years with very little paid up front, and the majority at the tail end of years 4, 5, and 6. So in total, it was 2.5 million. And we've got that coming up over the 6 years. And the next question is Africa Gas owned by the Moroccan state? No, it's a private company. It's owned by some billionaires as part of the Aqua Group, and it's listed as its own entity on the Casablanca Exchange. What differentiates Sound Energy Tendrara gas potential from the Predator oil and gas field in Gursif, if I've pronounced that correctly? I can't answer on behalf of Predator. All I would tell you is that we have a gas development. We have buyers for our gas. We have Africa involved. We have a gas sales contract. We have a concession. And I think Predator are working on their development and progressing that. So the big question was obviously, is there room for all of these players in Morocco? And the answer is yes. So, and we wish Predator well, we wish Chariot well, and we wish SDX well. Can you be specific on the timing of T4 drilling? I think we've talked about that already. It's going to be coming after the Cal Valley deal is closed. It will require a rig, and we're working how we can get that. We do have until, I think it's another year to fulfill the commitments on that Grand Tendrara license. But we want to get after it as quickly as possible, and it is independent of the phase 2 funding or our development on phase 1. Last question has come through on the 2 producers have been shut in for 6 years. How confident that they will produce as expected? Well, we've actually been in there and had a look at the wells. We measure the pressures regularly. We make sure everything's in good shape. And of course, we'll go in there. We plan as part of it to put the new wellheads on and the completion string in there. So we'll have a good look at the wells before it's on ready for production. So that's the end of the questions. Apologies for a few of the hiccups through there. Mark,
you've covered them all off, so thank you very much indeed. And of course, any further questions, the team will be able to review those, and we'll publish responses where appropriate to do so. Graham, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and Gary, if you could just have a few closing comments, please.
Yeah, fine. Well, look, apart from the technical glitches, I would say we can do our oil and gas business quite well, even we can't manage the IT side as well. The company, you can see, has now moved from being a pure exploration company with a couple of good wells. We know that to develop the Taggy reservoir, we need to mechanically stimulate it. We know there's a lot of gas in the region. Is finding the pot for doing that. We're going to have an opportunity to do that with the Cal Valley partnering with the TE4 well, Horst drilling. We have now, which I think people really underestimate the value of this funding mechanism we put in for phase 2. It's a big project for Little Sound, $300 million, $350 million in total. The funding to get us to first gas, and of course after first gas we'll continue drilling, so part of that 350 million comes after first gas, but that's in place, subject to us closing everything. So I think what we've got is Calvally, we've got good partners, we've got supportive governments with the ministry, with our state partner in ONIM, with Calvally, with a bigger entity behind it. I think with exploration potential, we're in a good position now. Clearly, we've got a lot of work to do over the next 6 months to get all this buttoned down, cleared out, approved, closed, etc. But I do think that our share price belies the value, the net asset value of the company. It belies a risk-weighted value of the company. And I think if you look at what we've done to de-risk phase 2 now and get that pipeline going, I have to say I'm a bit disappointed with the reaction in the market. But we live in very interesting times, as they say every year. So yeah, I hope we're in a position now to deliver, to reward our long-term shareholders with a material appreciation in the share price, but also new shareholders that are coming into the market. Those of you who came in last year at the tail end of last year are already seen a nice profit. Those of you who can come in now are all well and good. We're here to work hard for you, all stakeholders, all shareholders, and we're looking forward to closing with Calvally. We're looking forward to closing with Attijariya Alpha Bank. We're looking forward to delivering first gas next year with Ital Fluids, with Africa Gas, and we've got supportive shareholders with Ogif and Africa Gas themselves. So yeah, apologies for the glitches. 1 minute past 7, so I hope that can sort everything out for everybody. Have a nice evening.
Graham, Gary, thank you indeed for updating investors today. Can I please ask investors not to close the session? It should be automatically redirected in order to provide your feedback so the company can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the team at Sound Energy PLC, we'd like to thank you for attending today's meeting. That concludes today's session. Thank you and good evening to you all.